Hello and welcome to today's A-Team Group webinar on integrating intelligent machine readable news. My name's Sarah Underwood. I'm an editor here at A-Team Group and I'll moderate today's webinar. Our expert speakers today are Andrea Naden, Chief Quant Officer at Black Alpha Capital, Guraj Singh Sangha, Chief Quantitative Investment Officer at Token Metrics, Sergio Gago, Managing Director of Media Solutions at Moody's Analytics, and Saeed Ahmed, founder at QMacro. I'll ask them to introduce themselves in just a couple of minutes, but first, just some info to help you make the most of the webinar. To the right of your video screen, you'll see two panels, one for polls and one for questions. So we'll be running 3 polls during today's webinar, so please do take part in the poll. It's always useful to gauge your industry opinions and where you are along the line with intelligent machine news. The Q&A panel, please use that frequently and often. We'll be answering questions throughout the webinar. So if you have something to ask, just put it up there and we'll get to as many questions as we can through the webinar. And if we don't get to them all, we'll try and come back to you afterwards. So that's it from me, and let me come back to our speakers. So Andrea, please introduce yourself and tell us a little bit about your interest here.
Thank you, Sarah. Very good afternoon, everyone. My name is Andrea Naden. I'm Chief Quant Officer for Black Alpha Capital, a quant fintech hedge fund headquartered in London. We are developing trading strategies predominantly using machine learning techniques that I've used over the course of the years. We're not really using news yet, but I'm very keen to be part of this panel to discuss experiences that we all had, that I had, and see what the others have to say. Thank you for having me.
Excellent, thank you. Coming to you, Guraj.
Good morning, good afternoon, depending where you are. It's wonderful to be here. Thank you very much, Sarah and the team. I'm Guraj Sangha, Chief Quantitative Investment Officer at Token Metrics, as well as our hedge fund division, Token Metrics Ventures, which is a cryptocurrency hedge fund. Generally employ 2 different types of strategies, venture capital based as well as quant strategies, and use a lot of machine learning in developing each of these areas. And so excited to be here and share what we've learned.
Thank you very much indeed. And Sergio, over to you.
Hello, everyone. Thank you very much for having me here. My name's Sergio. I'm connecting from Barcelona. I'm the Managing Director of the Media Solutions Group at Moody's Analytics. And basically what we do is process intelligent news over to anyone who can use it. I've been a CTO for over a couple of decades, and I'm really happy to be here talking both from the business and the technology perspective on this nice topic we have ahead of us.
Thank you. And Saeed.
Thanks. First of all, thanks for the invitation. So I'm Saeed Amin, and I'm the founder of QMacro, so a fintech startup developing trading strategies and analytics for macro markets. I've got a particular interest in alternative data. I'm a co-author of the book of alternative data. And I've done a lot of work on many different sorts of news data sets. So news is probably one of my favorite sorts of alternative data, or at least the one that I have the most experience with. So I'm pleased to be a part of this panel for that reason.
Excellent. Thank you all very much indeed. And let's get going with our Q&A. But first, let's get started with an audience poll. The question is, to what extent is your organization using intelligent machine readable news? So while you answer that question, let me come to Andrea to set the scene by defining intelligent machine readable news and the extent to which it's being used. Obviously, his definition may differ to others. So over to you.
Well, I think we will all agree what it is. I think it's very straightforward. I think it's a technology that gives you the possibility, enables you to process unstructured data like news in the form of voice or text into analytics that can be then processed and added to an investment process. So it enables you to kind of look for additional and more responsive, if you want, signals taken directly from the news, which historically it was a task that was done manually. Typically, whenever there were big conferences, that you had analysts that were taking notes and then put up the summary notes up on a screen and then take a decision. Now you can use a specific technology to process the data automatically in a very fast and efficient way.
Okay, and before I move on, Andre, what is the sort of extent of take up here? You said you hadn't started yet, but what do you see around you?
Well, I think that it's a very big subject. I mean, classifying news, news means a lot of things. Typically, from news you derive sentiment, which historically is proven to generate alpha in the very short term. Therefore, it's incredibly useful for investors that have a very short-term time horizon, because the alpha decay is very pronounced. But then you have other type of news, for instance, earnings announcements, where instead I think that information is more usable. There are challenges to use it. There is some entry barrier to that. You need to either buy the signal from a third party or collect the data and do it yourself. My experience with sentiment was it wasn't right for what I had to do, because I've been working for the past 20 years mostly with mid-term frequencies, which means the holding period for any position is around 4 days up to 10-15 days, where sentiment doesn't really tend to help there. But yeah, I'm obviously open to see what if one can use other type of news. As I said, like earnings announcements, when I saw it last time, seem to be very promising. So possibly that's an area where I'll be spending some time doing some research.
Okay, great. So as you're coming to you on this one, do you see a similar definition, and how much use do you see of machine readable news?
Yeah, I think I agree 100% with Andrea's point. However, I think we have to go deep into each of the components of the elements. So news at the end of the day is events, things that are happening around us in the world that are relevant, but relevant for what or for whom? And Andrea was making a really good point on sentiment. There is not a single definition of sentiment, and even in the same company, in the same trading group, sentiment is going to be a completely different thing. Even in the same event, in the same story, you read any press release from any provider, and there are probably dozens of different sentiments in there. You're talking good about the CFO of a company, but then that company is maybe getting a downgrade on their rating, and then at the same time their credit information is pondering. So really, what is sentiment in here? That for me is the key on the intelligent part, on the intelligent machine readable news. We need it to be machine, because now the biggest problem is getting the signal from the noise. In the past, yes, we could have analysts reading the news clips from every day, getting the newspapers, maybe the most global sources out there. But clearly now that's not possible anymore, that we have media covering the smallest of the niches in the market and in any language, and even with different perspectives, right? In the same city, in the same news, you get the same analysis, but from two different angles. So that's why you need to put it machine-based. You need to make this unstructured content in a way that machines can make action, like you would need 1,000 analysts in the past. And then what do you call intelligence? It's not just extracting the signals and the different elements that would generate alpha, but also how about time? How time relevant is something that happened 100 milliseconds ago or 1 second ago. And most importantly, how things are related between each other. And I think that's the key on what we're trying to do in the industry moving forward. One specific press release, maybe talking about this company, but the alpha is being generated about this other company 3 events away or 3 elements away from the relationship. Maybe the CEO who was the CFO on a previous company before, who has another relationship. And then how do you cluster those together? So it's very much related to finding those signals that are relevant in a customized way for each person, whether you're a quant, someone on the Department of Defense, someone on risk management, a bank, you name it. And how do you make that at scale?
Okay, Thank you. Let's see the poll results, if we may, and see the extent to which machine readable news is being used. Sergio, would you like to comment on that? It looks pretty positive to me.
It seems so. But I think it's going back a little bit to the point before. Is this getting an API or getting a feed and trying to get some information to humans who will then make conclusions afterwards? Or is it a full automated pipeline that automates trading or automates credit scoring or any other use that you want? And how do you extract signals that are real time, but also spanning from the past? Say, how would a specific trade would be different if you knew that the CFO of that company was convicted for fraud, for example, 5 years ago? These type of things. But it's really definitely good news that most people here are using greatly machine readable news.
Excellent. Thank you. As you say, probably different ways of doing, but thank you for voting. And we're going to run another audience poll now just to carry on with setting the scene. And this one asks about how you're using machine readable news. So the question is, what are your key use cases of intelligent machine readable news at your organization? This time you can tick as many boxes as are appropriate for your organization. And while you do that, let me bring in Guraj, please, to talk on a macro level about the key use cases of intelligent machine readable news.
Sure, Andreas and Sergio, mentioned a few of them. Trading is an obvious candidate. For signal generation, understanding the degree to which news can be contextualized and related to events, developing models around there. Compliance, risk management, surveillance. There's actually an incredible number of use cases, I think many of which haven't even been discovered yet because it's still being adopted in industry. And more interesting recent use case, and Sergio somewhat alluded to this, is the developing an understanding of how events from the unstructured world and the news world can relate to one another, and how that can be translated into signals for action, whether it be in financial markets or other areas. It's a somewhat difficult area to investigate because of the broad data set and the complexity is involved, especially, and you're also traversing time, both in the past as well as real time. But it's one of the more interesting areas that I see a lot of investigative work being done in.
Thank you very much. And Andrea, would you like to add to that again, having mentioned it some of it earlier?
Sorry, I was muted. I honestly don't think that actually a macro level is where you can make the best use out of it, because macro information, so I'm referring to the economic data, if you want, generically, is much more structured, and it's reported in a structured way compared with other type of information. Therefore, I really don't think macro is the area where this technology can make a difference. Of course, translated into analytics, power with comments, it's great. It would be great for a day trader and good and great, but it's not for everyone. So I think the best applications are outside the macro space, but that's my personal view.
Okay, well, let's have a look at those poll results then, if we may. And Guraj, perhaps you'd like to comment here. There you go.
Sure. I mean, that's I think those are, I would have guessed, those are some of the top use cases: identifying market trends and evaluating market sentiment. I think having said that, understanding and contextualizing news from a macro level and translating it into signals is useful, but I agree with Andrea that I think there's far greater benefit when we actually take that type of information and develop actionable courses at a much more micro level, whether it's a specific, for example, in the crypto space, there's a number of different protocols that get released, related coins, related use cases, and the news around there is very unstructured, both in terms of what comes out, but understanding Discord feeds, Twitter feeds, social media aspects, and all relating that to a specific protocol is far more valuable than trying to relate it on a macro level and understanding where is Bitcoin going, or where is the crypto market in general going. So I think there's certainly benefits, but in our own work, we found far greater value in actually connecting this type of information at a much more micro level, much more granular level.
Okay, thank you very much indeed for that. And bringing you in now, Saeed, to talk more specifically what is typically contained in low latency and ultra low latency news feed and the use cases for this information. Obviously, there's plenty that comes in that doesn't have particular latency attached to it. So what do you see in the sort of low and ultra low latency space?
Well, I guess the most important thing is the timestamp. That's the key, to have a proper timestamp. And this is going to be actually the case for all sorts of news, but especially if you've got a low latency case, having an accurate timestamp is going to be key to that. And I think there's many different use cases for trading at a high frequency. One could be just alluding to the point that Andrea made, like central bank comments. So you have a press conference coming through, like Powell speaking, and then having a low latency reaction to that. So it could be, for example, market makers suddenly widening their spreads because of something that Powell has said. And they need to be the quickest to do that before they get steamrolled by people taking liquidity. Also things like trading halts and stuff like that, if they're disseminated on news wires as well, that's a key thing. So that's not so much necessarily making P&L, it's more of like a risk management type of thing as well. So there are many use cases, I would say, for low latency applications, although personally I've looked mostly at a kind of lower frequency work.
Okay, Sergio, what would you add to that in terms of what's delivered?
Of course, on top of the timestamp and how you cluster the same event that has been discussed from different perspectives is really what is inside that specific event, that specific story. How do you extract the entities inside? Which company are you talking about? Which person, which location? And validate the entity. So any NLP, natural language processing engine out there will tell you this story is about Apple Inc., about IBM or any other company. But really, how do you deduplicate it, match it with your own records to make sure that, hey, this is a specific ticker that we are referring to and not any of them. And then you go into your typical confusion metrics, as the folks in AI or data science would talk about, right? What's your level of accuracy and what's your level of recall? So that balance between how many false positives I have and how many false negatives will really have a big impact on your trading strategy or risk strategy that you want, and mixing all those elements. Once you have all those two things, then you can find the correlations that people was talking about in the poll. So some events happen through a long period of time, things that are building up towards a default event, for example. So all these events, timestamp based, linking different companies, some elements from the macro level, some things that are actually related to more geopolitical elements. Once you're able to mix all that in a nice knowledge graph that provides the information either to you or to the algorithm, then you can start saying or predicting that there is a very important trading event coming up very soon. Maybe that happens over a period of weeks or months, but really when it happens is immediate. So it's not just, hey, there's this new SEC filing, there's this new press release coming up, and then everyone goes crazy trading because of this element, but more about what happened previously in the past that made the threshold for the trade today, or not just trading. It could be many other cases, like tax avoidance elements, Department of Defense type of things, risk in general.
One thing that I'd like to add just on Sergio's point is that probably for a trader, they don't really want to construct their own knowledge graph. They don't want to have also, for example, mapping brands to tickers as well. It can be a very complex process, and you need to have a point in time history. So that is actually quite a complicated process. And that's ideally something that the data vendor would do, as opposed to the trader, essentially, because it's a full-time job in itself, keeping that knowledge graph up to date and having a point in time and stuff. So that's key, I think, to have all the mappings done correctly and nicely tagged metadata.
Right.
Correct. It's indeed a full-time job, not just adding new tickers, new companies, private and public, but also how your vocabulary expands. 2 years ago, no one spoke about, 2.5 years ago, no one spoke about COVID. So did your dictionary, your vocabulary that affects trading is ever evolving.
Okay, so third-party services required here, pretty much. Yeah. Okay, let's move on. And coming back to you, Sergio, what are the regulatory concerns and business risks associated with the use of intelligent machine readable news? We touched on risk a little bit earlier, but what would you say here?
I think that there are different concerns here, and they are different in different parts of the world. In Europe, we are a little bit more GDPR oriented, privacy oriented, and even coming up AI explainability oriented, in a way that if I do something based on news, I need to be able to explain why I came out with that conclusion, which might make some data scientists work much difficult as we move forward. In the US side, we have from the SEC, we have to be able to handicap the content delivery or embargo the content. So every receiver of one SEC filing needs to get it at the very same time. So you need to develop a delivery mechanism. Anything to be delivered, it can be machine readable news, but really anything that you send, even if it's a PDF, needs to be delivered at the very same time, regardless of where you are located, where your data center is, West Coast, East Coast, you name it. So you need to figure out a proper delivery mechanism, algorithm, you name it, to be compliant with the SEC. And then the third element is the liability. When you are making trades based on machine information, who's liable for going short on a specific ticker at any given time? Is your algorithm, is the human, is the trader, is the data provider? And what happens, this is something that we've been saying the last few years, when there is fake news going through the pipeline that also move the market in an automated way. So those three elements are really in the space today and need to be very, very well taken care of from the governance and compliance perspective in order to not get into trouble.
Okay, Saeed, what would you say in terms of regs and risk?
Well, I think Sergio addressed many of the points. For example, making sure that the delivery of the data is the same for all different clients. I'd also add on to the point the thorny issue of exclusive data sets as well. So if you have a data, like a news data feed, or it could be any sort of data feed, which is only exclusive to you and no one else, and the vendor doesn't sell it to anyone else, I think that could potentially be something problematic. So it's, and I know a lot of funds will, for example, avoid exclusive data sets for that reason, essentially, because then is it public material if you're the only person who's allowed to purchase it? It's actually a different situation if it's expensive and other counterparties are able to buy it, but there's a high cost to it. But if there's some legal reason why they're not allowed to buy, I think that is somewhat contentious in terms of a risk. And I'd also flip it on the other side in terms of business risk. I think there's also a risk if all your competition are using these data sets and you don't. That's a business risk as well in itself, that you kind of need to have it if all your competition are using it. So that I would say there's a risk of not using these types of data sets at the same time if you know that all your competition is using them. So then you end up with a bit of a blind spot when if you don't have access to it.
Right. So can you expand a little bit about what do you mean when you say if you had exclusive data sets, that would be a risk?
So let's say, for example, I have a news data set called XYZ, and then the data vendor only sells that to one hedge fund, and then another hedge fund comes along and they wish to purchase it, and the data vendor says, no, I'm sorry, I can't sell it. It's under an exclusive relationship with this certain other fund. In that situation, it might be difficult to term that data as like a public data set, and potentially it might be classified as non-public information. So I'm not a lawyer or anything like that, but it just doesn't pass a lot of, I would say, smell tests, shall we say. So potentially for a fund, maybe it's not worth venturing down that route. And it is something that I suspect regulators would not be that keen on going forward.
Okay, thanks very much indeed for that. And let's come to our final audience poll for today. We've touched on some of these issues, but it asks, what are the challenges of working with machine readable news at your organization? So again, you can tick as many of the boxes as you would like to. And whilst you do that, let me come back to Sergio, please, to talk a little bit about the challenges of working with intelligent machine readable news. We've touched on some, the need for timestamps, timing, content. How would you sum all that up?
Yeah, so accuracy indeed is the main stepping stone here. You want to be able to, you want to have an algorithm that knows that the story is talking about this company with a high level of accuracy. If you get a false positive in there, and then you take that signal for something else, then you may lose a lot of money. So that's the very first element that our clients ask for. Our SLA is about accuracy on those models. The second one is time, indeed, because if you go past the millisecond barrier, then you're very late for market makers and for some other type of signals. So the challenge here is that your typical data infrastructure on the cloud that you would build as a pipeline for many other cases in big data, data science and whatnot, doesn't cut it anymore. We're really back into co-located infrastructures where you are one cable away, rack to rack. So there's absolutely no network latency between the generation of the story, the structuring of the story, data extraction of it, and then delivery of that content. So it's a relatively highly capitalized and complicated to manage infrastructure that allows you to have that edge in the market while still being compliant with the regulations. And then the third element that's more on the data provider side is that there are tens of thousands of news providers in the world. For all your newspapers or all your earning call providers, all your SECs around the world, indexes, you name it. There's tens of thousands. You can say 50, 60, 70,000 around the world. Each one of them has their own way of delivering content, their own problems. In many cases, is media type of content, so not easy to integrate with. Therefore, you sometimes need to have ad hoc integrations with tens of thousands. That's really costly and difficult to maintain, and to keep that pipeline open real time. Sometimes you need to make sure that the pipeline is still open, and we realize that something's wrong on the other side before they do, before the publisher does, because we know that there's something broken on the pipeline. But you need to do that at scale with thousands and thousands of sources. That's definitely complicated.
Mm. Okay, Andrea, coming to you. Where do you see the challenges?
I think Sergio covered pretty much everything. I mean, one other aspect maybe to mention, besides the accuracy, understanding if the news is right or not, and how you add it to the process and so on and so forth. I think one other bit of information that we need to remember using, and this applies generically to machine learning in general, is that data tends to be reflexive. So you tend to have an impact on the data yourself once you take action on the back of a signal that's generated, as I said, from market data or from simply news. And so the big risk is that you get, let's say, old news, all beautifully prepared, all perfectly labeled. You run some back tests, very successful. you need to remember that that data, that information that you're now able to test was not available back then in the days. And so it may lead to a false good strategy. So you need to remember that, whenever the analogy that I often give is, difference between classifying a buying opportunity from a selling opportunity or classifying a dog into the right category of animals. It's a completely different thing, because if I identify a buying opportunity, I go out and trade, then obviously I may have an impact on that price and I can change things. Here, with the use of news, and particularly in the very short term, where you're dealing potentially with very, with liquidity issues, because in the very short space, market liquidity is not as great as you have, for instance, in other point in time during the day. That may have an impact. So that's the other thing that one needs to remember.
Okay, thank you. Let's see how our audience view the challenges. Yeah, I think Sergio mentioned that. Andrea, comment on those results, if you would, please.
Well, I'm surprised that accuracy comes second, I have to say. Huge volumes of data, it's a problem if you're handling the problem yourself, but if you're delegating it to a third party, it's someone else's problem. But it seems like the audience is doing the job directly. So easy to see it. I'm surprised. I would have expected accuracy to be the main problem.
Okay. Anybody else want to make a quick comment there?
From my side, no surprises. We see the data growth spiking exponentially year over year, terabytes, petabytes, exabytes of data. So every time is more and more difficult to find those signals. And even the person you have next to you will be looking for different type of signals. We were talking before, what is sentiment for you? Maybe you're doing trading signals and someone else is doing an intelligence analysis or market research. That's a completely different problem to have, but the data is the same. And you have to be able to search against all that corpus of data.
Okay, thank you very much indeed. And coming back to you, Saeed, what sort of practical approaches can firms take to selecting specific news feeds and integrating them with existing systems? Obviously, there are an awful lot out there. Selection is important. How would you advise on that?
Well, as Sergio was mentioning, there are many different sources of news data. And ultimately, it's likely that you'll need to aggregate several different sources yourself, and potentially those sources might have aggregated across many different sources themselves. But yeah, you probably don't want to aggregate all the thousands of sources yourself. The first thing I would look at, so my background is in currency markets, and most of the work that I've done has been on macro space actually for news, which is not, I think Andrea alluded to this, is not really the most popular space for news. I think equities is much more popular for news, but I would look at the types of news that, for example, traders will tend to follow. So what types of news services, what types of news articles will they tend to read? I guess they'll probably also look at social media as well. So just try to think in your head, what are the types of sources that a trader would look at? And then you can try and automate that process through machine readable news. Ultimately, if you're looking at a source that no one ever looks at, potentially there might be a signal there, but my guess is probably that it's less likely. And also, I think ultimately you want to combine together several different sources. So like at the moment, I'm looking at news, I'm looking at social media, and you get different insights from different data sources. So I wouldn't always just say you have to stick to one very specific one. Maybe try and combine them, and maybe you'll get a better insight into what's happening. Particularly with social media, because I think social media is, sometimes it can be obviously very inaccurate. So potentially having news as associated with it can actually kind of improve the signal then. So maybe looking at the volume of social media and then against news articles on the same subject, that could be an interesting way to incorporate social media as an example. But yeah, my top tip would be try to think of what are the data sets that say, should we say, real traders look at, and then you go from there essentially, just as a starting point. That's what I would suggest. And even then, you need to think about what types of topics you look at and so on. So I remember when I've done research like this in the past, and I've looked at a full news data set. If I don't really split up the topics or anything, I don't get any signal out. So you need to kind of know what new part of the news data set to look at, as opposed to looking at one ginormous data set, I would say. So
Okay, Andrea, as a practitioner, what would you say there in terms of selecting your news feeds and integrating them with existing systems? Obviously, something you're thinking about.
Mentioned already the right points. I think what I would say, what I'm seeing at the moment, there is this tendency that people like to throw a lot of data to their model. They like to make things complicated, and it's all good and great. We got computer power today that we didn't have 5, 10, 15 years ago. So it's all good and great. But actually, you need to trust the models that you build for trading. And in order to trust them, you need to understand them. And the simpler they are, the better it is. Therefore, need not be for everyone. It's really on your investment process. And if your investment process, I give an example, you're a super large sovereign wealth fund or a super large pension fund that rebalances its portfolio once a year, why would they be using news in their investment process? It makes no sense. If you are instead a trader sitting at a large investment bank and you need to hedge your book constantly, you need to be constantly there, well, then it makes sense. So I think it really depends if your process requires news. That's the first point. But most importantly, I think it's, causation should be driving that process. If you think that some of the inputs that you're using in your investment process may be affected by statements, news, then by all means, try to integrate and go through that challenge and see if you can add value. But as I said, I wouldn't just say, there is a new piece of technology out there that you can use, edit if it makes sense. Don't try to add complexity just for the sake of it.
Okay, so often the problem with data, everybody needs so much these days, and it's all about data, but too much can be a problem. Okay, I have some audience questions that I'd like to put to you. Let's see what we can do here. Said, can I put the first one to you? It asks, how can we build a business case for intelligent machine readable news?
Well, I'd say the first thing is, kind of drawing onto Andrea's point, do you already look at news in any case? Particularly if you're a discretionary trader. And if you're working at a short-term horizon, then yeah, my guess is that you'll have incorporate news as part of that process. Can you look at every single news article that comes through the wires? No, it's not really possible. So I would just drawing onto Andrea's point, if you already use news as part of the process, this is a way of making it more efficient, essentially. And I think then you can also aggregate sentiment on a much wider scale as well when you do it in a systematic way. So potentially to try and think of news as a tool from the point of view of someone systematic, it's essentially another data set for you to look at. That's the way I'd look at it. And you can point to the fact that it's being used by discretionary traders who read the news. So there's probably something in there essentially if you're a systematic trader. So that's the way I would try and look at it. The difficulty is obviously whenever you look at something new that you need to have time, a budget, etc. So you do need to try and make sure that that's available. Otherwise, there's no point embarking on the journey if you don't think there's going to be any time or a budget essentially to research the subject or to purchase the data ultimately. Okay, thank you very much for that one, Said. And Sergio, can I come to you on this one? This one may be a little bit difficult because we're not in the room with the questioner, but it says, our organization has integrated machine readable news, but we are not getting the benefits that we expected. Can the panel tell me where things may be going wrong?
Oh, that's a really difficult question because in every single step of the way, things can go wrong. From what is the content strategy, what type of content you're ingesting, and how related it is to your investment thesis. Do you have the 5, 6, 10 basic wires, or do you have segmented industry sources that are very relevant to your investment criteria or your specific elements? How quick are you integrating that content, and how accurate, based on what we were discussing before, are you really extracting the signal from the stories and the events? And then are you really extracting the alpha from those signals? Do you have the right algorithm, the right machine to prove your thesis in there? And how quick are you on those three elements? What I would say is divide and conquer, and try to do one thing at a time. Get the sources and use the sources manually, as you would do when you have your trading terminal in front of you. But use those sources as your principal input, and evaluate whether that's working or not for you. Once you get that done, try to automate those elements from the sources. Try to automate the NLP element, the structuring part of the pipeline, in order to get this signal from the noise. How are the filters working? And see if that subset of the content is really fake fluff content, or is legit content, and what correlations can you find from it, and for how long? Do you find correlations in the very, very short term, or is it more longer term type of trading? I'm not a trader myself. I can only speak from the tooling perspective, but that's what we see usually to be the case on the different elements of the pipeline.
Okay. Anybody else like to comment on that and say where things can go wrong that you might not expect? Yeah.
Sorry, one thing, Sergio, mentioned all very, very good points. The one other thing I would add is that what is not uncommon is there's a desire to embark on a process of integrating news, at a business for one reason or another, but the actual use case isn't well defined. And so then companies move forward, they develop pipeline, develop the models, and when they're comparing their output, they haven't defined a benchmark or a way to measure, have we actually move things forward, have we increased operational efficiency, et cetera, et cetera. And I think if you haven't done that at the beginning, you're going to reach a point where you're not quite sure whether you've gained any value because you never defined a benchmark to measure against. So it's always important before, really at the very beginning, trying to be as clear as possible as why we're doing this, what we intend to achieve, and how we can measure. What can we measure against? Use a benchmark to measure our success against.
Okay, thanks very much indeed. So Sergio said a very staged approach. Yeah.
Yeah, and I'd just like to add something as well, that often potentially you might have an issue whether you look at one specific data set in isolation. The difficulties in practice, if you're doing a trading strategy, you might have multiple data sets. So if, for example, sentiment for whatever reason doesn't necessarily work, in your use case, sentiment derived from text, try and think about other orthogonal data sets which can potentially be helpful. So one thing that people tend to look at together is maybe not just sentiment on its own, but market positioning as well, because that will give you an indication as to how the market will react. So if you have negative news, but everyone's already long a certain stock, it's probably going to cause more of a move. Whilst if everyone's already short, then potentially it's not going to cause so much of an impact. So there you're trying to reconcile an external element, which is sentiment from the news, to what people are positioned. So try and think through, are there other data sets, other sorts of variables that we can add to the model to improve it? Because it's not always the case that a data set will have an amazing signal by itself, but potentially combined with other signals, you might see an improvement. So that's obviously quite difficult, the second part. But ultimately, that's what a trader is supposed to do, like a quantitative trader, try and think of multiple data sets to combine. But that's where you get the real benefit, I think, of incorporating a new data set. So try and have a look at that would be my sense.
Okay, thank you all. And Andrea, I'm going to come to you with one. You've talked about a lot of, there's a lot of data being out there, and it says our organization sources a lot of machine readable news. It's costly, but not all of it is useful. So how can we reduce our costs while continue to have the content we need?
I wouldn't know how to answer that question. It's a nice problem to have. Dealing with tight budgets, I'm afraid, is something that I dealt with all my life. It's difficult. So I think I would split the situation into two phases. Very often, you tend to answer this problem at source because management typically tells you, okay, this is the budget, this is what you can do, you can go out and buy it. So it's just one thing for the management. But in reality, you should split it into two areas. The first part is researching what's really adding value, which means you don't need to do anything to your infrastructure. You don't need to integrate new data sets to your existing data sets, to the architecture, let's say, of your data. Just play with it, see if it adds any value, and then you commit to it. So I think you need to go step by step. If you've already spent a lot of money and you're not able to get value out of it, well, the simplest option would be take a step back and do it again from scratch, rather than randomly choosing what you think could add value or not. But it goes back to what I said earlier. I think you need to answer these questions very much in with this sort of thinking through, not really believing that there are intelligent machines, that there are intelligent models out there that are able to resolve the problem for you. At the end of the day, it's still the analyst where the value is. The fact that we have a piece of code that's translating the news, it doesn't mean that piece of code is the intelligent component. It's the person that's coded it, that made it, that's added some intelligence to it, right? So you need to think what is right for you, what is right for your investment process. My angle is not from a banking side, it's more from an asset management side, from a hedge fund side, and therefore I know what the goal is. I know what the investment process has to deliver at the end of the year, and I need to try to find the right alphas, the right signals that will be able to get me there. And a lot of work is continuously researching for alternative sources of alpha, which is a beautiful, I wanted to say horrible way of describing it, because there's no alternative as such sources of alpha. But, so I think it's really taking a step back and reassessing the process of integrating data to your investment problem.
Okay.
To your point, and Andrea, and also linking to what Said was saying on the type of content that you need to acquire, we're seeing this problem more and more and more lately in the last months and years. And also the content market is getting tighter and harder. Content is getting more expensive. There is new sources or different dynamics. So one of the things we say with our clients is that they ask us for how much or to what extent removing one source or adding one source would change those signals down the line. So we build type of ensembles, same as your ensembles with your models, ensembles with the input content, and we tweak it. What if we change this? If we remove this very expensive source that everyone thinks you need to have it, but all those stories that are relevant are going to come in anyways through some of the other sources. And voila, we see that suddenly you get exactly the same news, the same entities extracted from the other content, and you can realize some nice savings on your content strategy. So there's a lot of trial and error you can do by yourself, but it's obviously expensive and it's a puzzle game where you have to continuously fine tune it. But what we are saying this is one really big use case when people come to us, not just for the content, but also as for advice. What content should I buy to get the same signals moving forward? And there are many ways of reducing that budget down the line with all this overlap on sources.
Okay, well, thank you to our audience for the questions, and thank you all very much for taking them on. Moving on, let's talk about useful technologies. Sergio, please would you talk here a little bit about the types of sort of technologies, tools, services, and solutions that can help? As you said, there's a lot of data, there is advice. What do people not need, but what works well for them?
Right. So assuming you want to do everything by yourself, which I do not recommend, but let's assume that you need technology for the input of the data, for the pipeline, for the modeling, and for the output of the data. So at the very beginning, you of course need your content strategy and have someone to deal with all the licenses and all the content ingestion. That's going to be extremely painful. Some kind of ETL work that you can put anywhere. That's your very first tool set to put in place, ingesting the content. Once you have that, you have to normalize the content to make sure that you can compare apples with apples and pears with pears. So that's a lot of engineers that you have to put in there. Either use a homegrown tools or your own ETL system, plenty in the market out there that can put all that content in the same place, the same database, call it any way you want, but ideally a database or a data warehouse that allows you to filter, search, and organize your content in a nice way. Your typical cloud providers can offer a variety of tools in there, unless you look for really high-speed content delivery, in which this option is not viable anymore, because you have the next step, which is enriching the content. How do you get all this content in a normalized way and start extracting information out of there? You have lots of NLP engines out there in an API. Many of them will not allow you to have your own model developed, but that can give you some entity extraction that could be good for a proof of concept. However, once you go into a very specific investment case or business case in general, probably you will need your own specific model when you need to extract specific information on that. If you are specifically on equities, or if you are specific on real estate, for example, or in other type of trading or tax, or you name it, governance, compliance. So depending on what you do, your model would be custom made. Therefore, you need an army of data scientists, AI specialists to help you with that, or use one of the tools that are out there. Now, again, if you're looking for speed, you cannot afford to get your content, send it on an API to some cloud service and get it back. All that's going to take you half a second, 1 second or more. That's it. The market has moved already, and you're going to be the last. And then finally is the integration with your own system. Depending on what you use, you're going to have to get all these signals, get the filtering, and select what filters you want to apply, either on your own data warehouse, on your own API, on your own system to move it forward. Then it's buy or build. Typically, a lot of the things we see are homegrown solutions. Of course, many of the platforms out there offer their own type of pipelines, and then you plug in your content. That would be a high-level overview of the different tools.
Okay. Andre, what would your favorite techs and solutions be here?
I don't think I have much to add. I was just going to say something about NLP, but Sergio's already covered that. But I think one important point that Sergio mentioned in this very nice summary is the fact that today we may be forced to open up to buy third-party signals. When I started my career, over 20 years ago now, there was this tendency in the quant space to do everything yourself. You had to crunch the data yourself. You had to analyze, collect the data, clean it, understand what you were doing. The idea of going out and buy something from someone else was just not really an option, because what kind of edge would you have, compared to others? If I can buy the signal like anybody else can, how am I going to be able to take better advantage of that? The reality is, as Sergio said, that particularly in the news space, given the amount of data, given the amount of, the speed that's required, only very few people will be able to do it themselves, I guess, and they will need to outsource that calculation. The challenge will remain being able to tailor the product towards the need of your own organization, I guess. Being able to get a signal that reflects what you really need. But more and more, we will hear that. We will hear, it didn't start yesterday. There are lots of companies that have been trying to sell signals, very few successfully. And I've always been kind of skeptical, because I always thought, if you have a signal that is very good, why would you not go out and trade yourself with your signal rather than trying to make a pound for every time you sell it? But I think complexity is what lies underneath this technology, and depending on the on the scope of your exercise, just as an example, there are global equity managers that theoretically have to track over 4,000 companies. I mean, the size of the universe is ginormous. I mean, it's impossible to employ so many people to, do that job. So, I think Sergio covered the question very well. So I don't want to add anything else on the technology side, but I think the element that we need to potentially accept outsourcing the calculation is become a reality, possibly a necessity.
Necessity. Okay, thank you very much indeed. And coming back to you, Garaj, can you just quite briefly describe a firm that has sort of managed to get there in terms of implementation of intelligent machine readable news and its outcomes?
Could you repeat that? I missed the first part of that.
Yeah. Can you sort of talk us through a company that has done some of these things? And
Sure.
What they've achieved?
We've here at Tokenmetrics, we've developed and we came across an interesting use case, and I'll just briefly describe it. And that was, there's a number of influencers on YouTube, Twitter, which are quite impactful in the crypto space. And what we recognize is that in the same way that there are influencers in equity markets, macro, Andrea mentioned, Fed Chairman Powell, when he speaks, the markets tend to move. And so what we were trying to develop is essentially a news-based knowledge graph in which we could take all available data that emanates from influencers on different social media platforms, connected to a number of different protocols in the crypto space, correlated with orthogonal sets of data, and develop signals around it. And it's an interesting work in progress, but it's the sort of the cross-functional aspect, which you begin with an interesting use case and you realize that it actually can be quite interesting and quite useful. I mean, there's a number of different use cases, but that's one in specific that we worked on, which we've had great success with.
Excellent. Thank you. Useful to hear some great success here. I'm going to move to our final point now, as we are very close to time, and ask a couple of our speakers to provide some advice for everybody who's working in this area. Saeed, perhaps you'd like to go first.
In terms of advice for anyone working in this area, I would say kind of reiterating some of the comments from all the panelists. So try and think about the news source that a trader would use, essentially, and try to gravitate towards that as a first step. And also thinking about the types of topics that a trader would look at as well, and try to replicate that process on a systematic basis, essentially. That's what I would say. So try and use your domain expertise of the market that you're looking at to try and filter the news in the right way, and then go away, number crunch it, and do all the kind of the fun quant stuff. But have a nice idea to begin with, to kind of reduce the scale of your problem.
Okay. Sergio, final word from you.
I would say test, and keep testing, assemble and keep testing and testing. Do rely on things that make your life simpler and easier, as Said was saying. So either get smaller data sets, smaller sources, and then you can imagine test and keep testing it. And rely on the past, but not so much. I think Andrea made a good point on that. You can train your models and choose your data sets based on the past, but that doesn't necessarily correlate, because of now we live in a different world from 5 years ago. But still, that's a really good level of information. And keep testing.
Okay, thanks. We'll have to leave it there for today. So thank you very much indeed to all our speakers for sharing their expertise and experience today. And thank you too to Moody's Analytics for sponsoring today's webinar. It's been an interesting conversation with lots of detail and lots of opportunities to pick up to try and inform our audience. So thank you very much for that. Before we close up, just a few A-Team Group items that may be of interest to you. If you scroll down your screen to additional options, you'll see A-Team Connect. It's a powerful and elegant and immersive professional platform that we've developed and you can use to deliver highly effective and interactive events and webinars. You can also sign up for A-Team Group's Trading Tech Summit London, which we'll host in February 2022. And you can also download the latest edition of our Regulatory Data Handbook, which covers 2021 to 2022. So that said, that's it for today. So thank you again to Andrea, Guraj, Sergio, and Saeed. And thank you to all of you who've taken part in the webinar. Please complete our feedback form, as we're always keen to hear about your views and improve our products. Meantime, thanks again all, and goodbye.